This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Odd jobs. The March jobs report was nothing if not confusing. Unemployment was down, but job gains were meager, and the market shrugged it all off. He said, she said. The president's summit by the sea with China's leader Xi Jinping ends with soothing words, but a little more. What the meeting accomplished or didn't on trade, investment, and more. Swift strike. U.S. cruise missiles hit Syria, sending a message to Assad and Moscow about chemical weapons use. Safe havens rally. So is the run in so-called risk assets in jeopardy? Those stories and more tonight on Nightly Business Report for Friday, April 7th. Good evening, everyone, and welcome. Sue Herrera is off tonight. Well, it was one of those days in the stock market. A lot of news to possibly move prices sharply one way or the other. There was, of course, the U.S. missile strike against Syria in retaliation for this week's chemical weapons attack that killed scores of Syrian civilians. There was a head-scratcher of a U.S. jobs report. The economy added just 98,000 positions in March, a little more than half what economists expected. And there were those potentially contentious discussions between President Trump and China's President Xi at Mar-a-Lago in Florida. So what did the market do on a day that could have gone either way? Well, it kind of went neither. By the close, the Dow fell about 7 points, the Nasdaq was lower by 1, and the S&P 500 fell nearly 2. But that lack of motion in stocks doesn't tell the whole story. Oil was up near a one-month high. Gold got a safe haven bid. It finished at $1,256 an ounce. But perhaps the biggest moves were in U.S. Treasury bonds. Safety-seeking cash flooded in overnight, sending the 10-year notes yield below 2.3%. But by the end of the day, yields rose again, and the 10-year finished at 2.38%, the highest in a week. More now on that curious jobs report. The headline number was ugly, and surprisingly so. Hiring slowed in March, but as Hampton Pearson reports, sometimes if you focus on the headline, you miss the real story.
There was good news and bad news in the government's March jobs report. The good news, headline unemployment dropped to 4.5%, the lowest in a decade. Some 472,000 persons found jobs last month, and the number of unemployed persons fell by 326,000. Signs, leading economists say, of a strong jobs market.
What this tells me is it's a very tight labor market. The unemployment rate at 4.5 is already 0.2% below the Fed's long-term target.
The bad news, just 98,000 new hires, the lowest in 10 months, with a loss of some 30,000 retail jobs and bad weather the key factors, far below the consensus forecast for 175,000 new jobs. Additional downward revisions for January and February pulled the three-month average to just 178,000 jobs per month.
We can blame a lot of it on the weather, at least 80,000, I think, on the weather alone. So that's the good news is it's wacky weather, and we're now sort of going to see a bounce back.
Wage growth remains modest, just 2.7% during the last 12 months to about $26 an hour on average. Economists say right now the tight job market isn't stopping employers from keeping the lid on wages.
The wage growth is not great, but it certainly looks to be sustainable. And as it recovers more, we think that will be the one to watch.
So now there's room for both wages and jobs to continue to grow. And economists say no reason for a one-month setback to upset the Fed's plan for maybe 2 more rate hikes this year. Hampton Pearson, Nightly Business Report in Washington.
One job that was filled today, Supreme Court Justice. The Senate confirmed federal Judge Neil Gorsuch to the High Court by a vote of 54 to 45. Gorsuch could have a decisive effect on several business and financial cases, including one involving the regulation of debt collectors and another regarding religious institutions and government benefits. Now to Syria, where last night's lightning strike by U.S. cruise missiles against a Syrian airbase sent shockwaves around the world, from Damascus to Moscow to Tehran to presumably Pyongyang. But apparently not so much to Wall Street. Michelle Caruso-Cabrera reports.
The U.S. government says it launched 59 Tomahawk missiles last night from 2 U.S. warships in the eastern Mediterranean. The Pentagon released this video. The target of the missiles? An airfield in western Syria that the Pentagon says was used to conduct a chemical weapons attack earlier this week in the 6-year-old Syrian civil war. That attack, seen around the world, killed more than 100 people.
There can be no dispute that Syria used banned chemical weapons, violated its obligations under the Chemical Weapons Convention, and ignored the urging of the UN Security Council.
Russia, which supports Bashar al-Assad, the leader of Syria, called for an emergency meeting of the UN Security Council and condemned the attack. But U.S. Ambassador to the UN, Nikki Haley, said the U.S. was ready to do even more and then slammed Russia.
It could be that Russia is knowingly allowing chemical weapons to remain in Syria. It could be that Russia has been incompetent in its efforts to remove the chemical weapons. Or it could be that the Assad regime is playing the Russians for fools.
Secretary of State Rex Tillerson is still scheduled to travel to Russia next week. For Nightly Business Report, I'm Michelle Caruso Cabrera.
The strike against Syria came, of course, as the president met in Florida face-to-face for the first time with China's President Xi Jinping. So what did the leaders of the world's two largest economies accomplish during their maiden discussions? Kayla Tausche reports from Palm Beach.
U.S. officials said a one-day summit with Chinese leaders was direct, frank, and constructive. Secretaries Tillerson, Ross, and Mnuchin telling reporters at its conclusion the two nations had agreed to engage through a framework in 4 parts: diplomacy, economy, cybersecurity, and culture. Additionally, they're pursuing 100-day talks on trade. They're committed to a denuclearized Korea. Commerce Secretary Ross cites a growing rapport between the two countries. The news coming after the United States Thursday launched 59 airstrikes on a Syrian airbase in response to a chemical attack there. Assisting the president, a unique assembly of advisors, many in roles outside security and the military, hovering in a secure location at Trump's Mar-a-Lago resort. The president deflected press questions about Syria during a bilateral meeting with President Xi, but President Trump says the meeting was productive.
I think we have made tremendous progress in our relationship with China. My representatives have been meeting one-on-one with their counterparts from China, and it's, I think, truly progress has been made. We'll be making a lot of additional progress.
The airstrikes took place while the two world leaders dined together. A White House spokesman says Trump informed China's president before the missiles made impact.
The message at Mar-a-Lago, we don't want to embarrass President Xi. We want him to save face. We want it to be collegial. But there's no doubt that if President Trump can take decisive action in Syria, as he did, he can take decisive action in North Korea. So that sends a message to Asia and to China as well.
The two leaders appeared congenial, but opinion pieces in China called the strike both a show of force and also made in haste, referencing Trump's own criticism of the previous administration's consideration of an attack. The administration stressed this is the beginning of what it calls a constructive dialogue. President Xi extended an invitation for President Trump to make a state visit to China, and Trump accepted, but no date has been set. For Nightly Business Report, I'm Kayla Tausche, Palm Beach, Florida.
Let's discuss the market's reaction, or lack of it, to the headlines that dominated the narrative today: jobs, geopolitics, and the future of the U.S.-China relationship. Joining us now is Lara Rame. She's Senior Economist and Director of Fund Strategy at FS Investments. Lara, welcome. Good to have you with us. You know, this was one of those days, as we said earlier in the broadcast, it could have gone either way big time, but it went neither. How do you explain the lack of reaction?
So, you know, I think when we think about that, we have to look at stocks. As you said, there clearly was a reaction in some of the classic safe haven currencies, but the stock market has just seemed to be very complacent, for lack of a better word. We've shrugged off events that I think historically would have been seen as market negative. Every piece of good news is seen as an excuse to rally, and then news that is somewhat of a downside surprise is treated with a shrug. So I see the continued low level of volatility, and this really sort of uncertainty fatigue is something that concerns me a little bit.
So does that complacency encourage you or worry you?
I mean, I think it's interesting. The last 2 years have really seen, Brexit, localized equity issues in China, issue after issue has just sort of been shrugged off. So when I look at markets, I really see that this lack of ability to really see risks in the world as more balanced. We have extremely positive perception in consumer sentiment, in business sentiment, but the actual data haven't been as strong. It hasn't followed up, and markets just keep going. They're further and further out on a ledge.
Do you think that let's get to apart from the day's events, which were meaningful in their own right, do you think that the fundamentals of corporate profits of the economy are strong enough to justify prices where they are and keep them growing?
To me, that's a real concern. Over the long term, corporate profits really follow growth. And when we look at the U.S. economy, we see that it's fine. It's relatively healthy and it's cruising along around 2%. The problem is corporate profits are also just sort of cruising along. They've really flatlined mostly since 2012, and equity markets have kept right on going. I don't know which way it's going to correct, but it makes me concerned that markets have such a one-sided view of the world.
Is it time then for me to play defense or offense, take advantage of pullbacks?
When I look out, especially looking at some of the geopolitical risks, some of the rhetoric that we've gotten out of the government that's talking about changing trade agreements, one thing that concerns me is that the S&P 500 has a tremendous amount of international exposure. I'm favoring investments that are a little closer to home, investing in companies that primarily get their growth and their revenue from the U.S.
Right.
That's where I see the most stable opportunity right now.
Lara, thanks very much. Lara Rame is with FS Investments. Have a great weekend. Still ahead, a labor market bright spot in the sky.
I'm Kate Rogers in Dallas, and as more travelers take to the skies, carriers like Southwest Airlines are hiring. We're going to tell you what they're looking for tonight on Nightly Business Report.
Today's jobs report was a bit of a letdown, but if you look beyond the headline numbers, as we mentioned before, there are actually pockets of real growth in the labor market. And there's one industry in particular that is expecting hiring to take off. Kate Rogers reports on where the jobs are today from Dallas, Texas.
The airline industry employs some 700,000 people in the U.S. alone, and experts expect the need for manpower to grow with the number of air travelers doubling by the year 2035.
Based on all trends, the next few years look to have more hiring in the airline industry. And that's important because the more we hire, the more actual jobs we create, and then that ripple effect throughout the economy.
The industry is also hoping that the new White House administration will help boost growth with deregulation, lower taxes, and modernization of air traffic control systems.
They've also shown a proclivity for looking at current regulations that don't make any sense and eliminating those. Those savings, those efficiencies will make us better able to continue to invest in our employees and in our product.
Carriers like Southwest Airlines are expanding in nearly every part of their business to meet demand. The airline is recruiting some 4,000 workers for ground operations positions this year, like Shane Parker, a 20-year veteran ramp agent.
I'm responsible for making sure the passengers' luggage gets transported to the proper destinations. I'm responsible for making sure the aircraft gets turned on time, and responsible for safety of me and the fellow crew around me.
The job is competitive, as Southwest has hired only about 2.5% of applicants for ground ops positions in 2016.
We are picky. We hire for attitude and train for skill. We are looking for employees who can live the Southwest way. For us, that means having a warrior spirit, which means a desire to work really hard and have a sense of urgency. To have a servant's heart, which means you put others first. and have a fun-loving attitude.
At Southwest, salaries start at around $13 an hour, but long-tenured employees can make up to $30 an hour. Other perks at the airline include free travel for workers and their families, 401ks with matches, and profit sharing. But challenges for ramp agents like Parker include long days spent outdoors, rain or shine. For other ground ops workers like Catherine Mills, a newly hired customer service agent, it also means dealing with travelers at their very best and worst.
Just remembering not to take it personally. It can be challenging. You never assume the reason for someone's travel is the same.
For Nightly Business Report, I'm Kate Rogers, Dallas.
As we reported earlier in the program, the retail industry, by contrast, is shedding jobs. The losses come as consumers change their shopping habits, causing major brands to close up shop. Still, certain stores have managed to avoid the pain, while others are barely hanging on. Courtney Reagan has more on the so-called retail wreck.
It's a tough time to be a retailer, but perhaps a tougher time to work for one. 22,000 retail jobs at general merchandise stores were lost in March, 13,000 positions cut at department stores, and 6,000 more at clothing and accessory stores. Many of the job losses, the direct result of store closures. So far this year, retailers plan to close almost 2,900 stores, more than double from at this same point last year, and it's likely not over yet. Credit Suisse estimates nearly 8,700 store closures could be announced by the end of this year. That's thousands more than during the Great Recession. Some of those losing jobs will be transferred to nearby locations staying open, but many of those workers are hitting the unemployment line.
And it's not just the clerking job, which is a very important part of retail, but retail is about technology, it's about marketing, it's about executives.
The number of store closings isn't that much of a surprise as the ever more connected consumer shifts from in-store to online and buys less stuff.
The seeds for this were sown at least 5 years ago, probably at the beginning of the decade, and that's when Amazon really started to gain momentum, and many retailers got caught off guard.
But don't count retail out just yet. This sector, which employs or interacts with 25% of the jobs in this country, could see this big problem as an even bigger opportunity.
Stores have to transform themselves. Look at malls in, interesting places like Dubai, where you have skating rinks or ski slopes. What are you going to do in each of the stores to make it exciting and different?
Though it remains to be seen whether an industry that didn't quite recognize the looming threat Amazon posed to be able to quickly reshape itself for what might be coming next. For Nightly Business Report, I'm Courtney Reagan.
A standout in the retail space is where we begin tonight's market focus. Telsey Advisory lifting its rating on Walmart to outperform, saying it sees the company picking up more market share and experiencing stronger sales growth over the next few years. The brokerage firm also citing Walmart's investment in e-commerce. Walmart shares up 2% on the session at $72.90. Shares of enterprise software company Okta spiked in the firm's market debut today, opening on the NASDAQ above $23 a share, and that was higher than the company's initial public offering price of just $17 a share. Shares finished the day up 38% at $23.51. Household products maker WD-40 saw its shares slip sliding away today following the company's disappointing results after the bell yesterday. WD-40 missed profit and revenue estimates, said it's cutting its year sales outlook as well. Shares well lubricated to the downside, falling more than 4.5% to 101.95. And now to our market monitor, who has 3 stock picks for us tonight, one of which is a retailer despite that sector's recent issues. The last time he was on, a little more than a year ago, he recommended stocks that have been mixed, as you see right there. He's Michael Binger. He's Senior Portfolio Manager at Gradient Investments. Michael, good to have you with us.
Well, thank you for having me back.
Happy to have you back. Let's talk first about your first pick, which I find a little bit curious, but you have good reasoning behind it. That is the mall operator, or REIT, Simon Property. What do they have that so many others in this business don't?
Well, the thing is they own the malls, and they own premium malls and premium outlets, discount outlets, where retailers are trying to get into. So, yeah, we have a retail I don't think it's a retail wreck, but a lot of people are calling for that. But we have a retail soft cycle right now. But that doesn't mean that the retailers aren't paying their rent to the mall owners. Simon Properties stock has gotten crushed. It's gone from around $250 down to about $170 right now. I think they're going to consistently continue to grow those earnings about 5 or 6%. It has a 4% dividend yield there, so I think it's a good way to earn about 10% on an annualized basis in a very conservative stock. So it's not a part of this retail wreck because they're not a store. They don't sell stores. They're an office space that houses retail stores there. And if one store leaves, say a Penny's or a Sears leaves, a restaurant or a movie theater is more than happy to take that space and move in and pay rent, and probably a little more rent than JCPenney and Sears was paying.
Pretty much every one of us would love a nice 10% return. Let's move on to Schlumberger in the oil services business. Why do you like it?
Well, as we all know, oil has recovered dramatically from below 30 a little over a year ago to today it's sitting over 50. We think as we exit 2017 that oil will probably be closer to the $60 than the $50 range. I think a great way to play that is you've seen the E&P or exploration and production companies rally a lot already. You've seen drilling rigs increase a lot from low levels.
Right.
And now I think the next cycle is going to be the people like Schlumberger who sell services and equipment to those drilling rig operators.
And finally, a very quick 20 seconds on your third pick, Granite Construction.
Oh, great play. If you want to look for a stock that has potentially a 10 to 15-year tailwind behind it, they're one of the largest construction companies in the country. Think of roads and piers and docks and things like that. We have an infrastructure bill that's going to come to us. California today just passed a big road construction bill. It's a tailwind for this company. I think it's a long tail play, and it's a great entry point right now.
Michael, thanks. Have a great weekend. Michael Binger with Gradient Investments. Appreciate your time. Still to come, how one man's desire to help his customers quench their thirst turned into a bright idea and a very tidy business. Back in the late 1990s, we weren't yet shopping for every little niche item we could think of on the internet. And that's why one Buffalo entrepreneur with a sense for suds got the bright idea to start selling hard-to-find tools for drinking on the World Wide Web.
Are you ready for a cold one? How about an in-home bar setup? David Rivers sells everything but the booze.
Bar sinks, ice makers, anything on the bar top from jiggers and shakers and bar caddies.
His company, Kegworks, is an online one-stop shop for bar supplies. It started in the late 1990s. E-commerce was barely a thing, but craft beer and home brewing were all the rage. Rivers, a beer salesman by trade, was often asked where parts for in-home draft beer systems could be had, usually using a refrigerator and a keg.
You know, it's a kegerator, it's a kegulator, it's kegerator spelled with 2 G's.
Whatever the name, a good regulator is key. That's the valve and gauge system used to maintain pressure and keep beer fresh. Rivers knew a wholesaler and asked if he could take orders on the internet and fax them over, and then have the wholesaler ship the equipment out.
He goes, sure, right, let's see what happens, kid. Here's a couple catalogs, have a nice day.
Within 2 years, Rivers had so many orders for kegerator kits and assorted other barware coming in that the wholesaler asked him to stock his own inventory and ship it himself, so he did. First out of an apartment, then a garage, then warehouses in downtown Buffalo during the early 2000s.
It was pretty desolate down here, and at that time there were only about 250 people living in the core of downtown.
Since then, a downtown renaissance is bringing in restaurants and bars. In 2005, Rivers hired a CEO, Tom McManus, to help grow the business. Together, they're helping restaurant owners like James Roberts.
So this is basically the core of our draft system. You know, individual regulators per line allow us to adjust pressures for each beer.
And bars need foot rails, right? Web orders quickly overwhelmed another supplier, so Rivers began buying his own metal tubing, end caps, and brackets. Kegworks can bend the rails to spec and then powder coat them, paint them, basically. Sunset Copper, anyone?
The secret to the sauce is making things available to people that normally would have a hard time finding them.
A 6-foot rail kit can be had for less than $200. Kegerator kits start at about $100, but the inventory, some 7,000 items now housed in the Buffalo suburbs, runs the gamut from glass soda siphons made under their own private label.
It's an older style that hadn't been made for years.
To niche beverages like Cheerwine, a North Carolina-made cherry soda, popular down south, but hard to find elsewhere.
We got a phone call from a gentleman who was local saying he couldn't believe that we had it.
A bar in the office? You bet. But how about this bottle cap wall? 2.5 months to build out using 50 to 60,000 bottle caps. Kegworks estimates 2017 revenues between $12 and $13 million. And a guy who says he left college in part because a roommate installed a kegerator can thank the kegerator for never having to go back.
Getting into this, I never thought that this business would ever be this big. I attribute that to our team. I'm not the smartest guy in the world. Hire smarter people and get out of their way and let them do what they do.
Kegworks says it shipped out more than 285,000 discrete items in 2016, and Rivers says his company might be the world's largest supplier of bar foot rails. Kegworks sold nearly 10 miles worth last year alone. That's Nightly Business Report for tonight. I'm Tyler Matheson. Thanks for watching. Have a great evening. Have a great weekend, everybody, and we will see you next week.